Hello, my name is Indraneel Karlekar, and I'm Global Head of Research and Strategy with Principal Real Estate Investors. In the following few minutes, I'm going to outline key highlights from our recently published Inside Real Estate, which is our strategic outlook for 2022. Needless to say, we've come off the backs, or we're still in the middle of an ongoing global pandemic, but we are closer to the end than the beginning, we hope. As we look out at 2022, we look at several key issues which I think are going to be quite interesting in the way they play out, not only for the broader economy, but for real estate in particular. What I'd like to do in the next few minutes is highlight some of the key themes that we've identified are going to be quite important for investors, and then briefly walk through some of the key takeaways from an investment perspective as we look out at 2022 and even beyond. Starting off with outlook on growth, I think it's safe to say that we are more optimistic now than we were 12 months ago. And a lot of that, of course, has to do with the way medical technology has developed and has allowed us to develop and deliver vaccines with rapidity across the world that is allowing us to reopen at a pace that was frankly quite difficult to predict 12 months ago. That being said, we do believe that global growth is going to be broader in 2022, and that leadership will not be limited just to the US. I think the US did the hard work, the heavy lifting of growth, given the very strong policy responses that we've seen. And that is going to broaden out into 2022, particularly into Europe and then the emerging economies as vaccination rates accelerate and the world starts to move towards a new normality. That being said, obviously, we have to keep in mind that the pandemic is still very much with us. Case in point, the news around Omicron suggests that it will not be a linear path to reopening. It'll be more a path of stop and go, with the caveat that we will be in a better position to deal with whatever new variant that may emerge in the next 12 months or beyond than we have been in the past. The other important takeaway as we look out at 2022 is clearly we are on an inflection path as far as interest rates are concerned. This is very much a new change that has happened just in the last 30 days, where the Fed in the US has made a very important pivot away from easy monetary policy towards clearly a more hawkish stance when it comes to raising interest rates as it relates to its desire to control inflation. And that is going to be a key determinant for all investors globally, but for us in real estate, we think it's going to be something that bears watching very carefully, because like all other risk assets, real estate has benefited quite enormously from the easy money that we've seen flood global economies over the last 18 to 24 months. So we are urging our investors to be watch very carefully for signs of quicker than expected tightening in 22-23. As we look at the real estate markets, what's quite striking to us is that the pandemic in some ways has changed some things for perhaps permanently, and on the other hand, has reinforced some trends that were existing before the pandemic became evident. And in that sense, we think that our view on 2022 and beyond is really one of a bifurcated opportunity set in the way we think about real estate investment opportunities. And by that, we mean that the property types that we think and opportunities we think that have been benefited most from the pandemic are those that have structurally embedded drivers of growth that were reinforced by the pandemic. We define these long-term structural drivers of growth as our digital drivers of growth. And by digital, we encompass many large thematic drivers. So D for demographics, I for innovation, G for globalization, T for technology. We believe these four large thematics will have a very powerful role for the way we invest in the years ahead. And more importantly, from the lens of where we sit, we think these large drivers will have a most profound impact on non-traditional property types, or what were hitherto known as niche property types. So we firmly believe that a key item to investors to consider, a key thematic going forward, is the emergence of these non-traditional property types very firmly into the mainstream of investments, not only in 2022, but as a secular theme going forward. Other themes that we think are going to be quite important for us to focus on 2022, but beyond is a bit beyond too, are those focused around some of these some of these digital themes. So let's pick on three or four that we think are going to be quite important. One is around housing. We think the great demographic shift that we've seen during the pandemic will make the desire for housing a much more open, broader set than we've seen in the past. That's something we think is going to open up manifold investment opportunities for investors looking for ways to play the housing market. Uh, Office market. Are we going to go back to the office? Yes, I think we will go back to the office, but the way we go back is going to look quite different from what we have experienced prior to the pandemic. So we think there's some opportunities, but it'll look different from what we've invested in before. Uh, Retail and shopping, the death of retail has been foretold many times. While we are certainly not super optimistic on retail as a whole, we do think there are pockets of opportunities, and we think that shopping and retail will remain a very viable opportunity, but it'll have to be very much a laser focused type of opportunity that we think will make sense for investors. Finally, if you look at e-commerce and the logistics market, we think that the e-commerce juggernaut is not going to win. In fact, we think the e-commerce juggernaut got a huge tailwind from the pandemic, and we think that e-commerce, along with logistics, continues to be a mainstay of investment opportunities going forward for the foreseeable future. And finally, I think if we wrap up our 2022 outlook, we think the most profound change or the most profound opportunity that we are articulating to investors is really focus on our digital teams as being able to, as using that, our digital teams as a way to identify both markets and opportunities and pick those property types that can really play to those digital teams in building out a holistic portfolio. So let me just pivot to those three or four important points that I think are quite important from our perspective in terms of identifying those long-term drivers of growth. So I wanted to just maybe spend a little bit of time highlighting the three or four key takeaways for 2022, maybe picking off with housing. We think housing is a truly tremendous opportunity for investors in 2022 and beyond. And as we think about what's driving housing, it's several things. It's the cost of living, which has obviously become quite prohibitive in gateway markets and coastal markets. The desire for more space amongst millennials, the need for more openness in this environment where the pandemic still remains, and finally, the change in demographics as millennials move into the stage of creating households. So we think these profound shifts are actually creating a significant set of opportunities within the housing market, which is well up beyond what traditionally has been the institutional marketplace for investing. Multifamily. We think there'll be lots of opportunities housing across the continuum, whether it's from single family rentals to manufactured housing to suburban housing and of course to affordable housing. So we think there are potentially a significant set of opportunities in the housing sector driven by our key digital driver of demographics. Looking at the office sector, which we think is, of course, very important for investors, it's a large part of the investment universe. It's a large part of indices across different markets. In the US, certainly it's a big component of the NACREIF index. We think that the opportunity set in office is going to be a little bit more nuanced. We think that investors should certainly keep investing in office as part of their arsenal, but we think that they really need to be quite selective about where they want to invest and how they want to invest. We think that gateway markets for the next couple of years are probably going to be quite challenged, partly because they're so resilient on mass transit. And until we really feel quite comfortable using mass transit, we think that office occupiers will be quite reticent to come back, and so will employers. On the flip side, we think suburban markets or markets that are less reliant on mass transit are probably going to offer some interesting opportunities. And then you layer on markets that have some of our digital drivers, whether it's technology, whether it's innovation, whether it's life sciences. Those are the markets, office markets, where you think there'll be some really interesting opportunities to put capital to work. That being said, of course, the challenge is pricing. We think that office transaction markets really haven't revealed much distress because of the lack of transactions. We don't know whether there is going to be true distress in the office markets, in our view, the best way to play it is really by trying and picking up some value add opportunities where possible. Or if you want to buy core, really stay up the quality curve, stay up new office assets where you can, which meet new ESG regulations. So we think the office opportunity is still going to be very viable, but it's going to be much more nuanced in 2022 and beyond. The third thematic, which we think is quite important, is that around shopping and retail, which we touched on earlier on. We think the environment for investing in retail assets is going to be perhaps a little bit more optimistic than it's been in the past. We've obviously seen big format retail suffer quite badly even prior to the pandemic. E-commerce was eating away significant margins for retailers, lots of bankruptcies. We think we might have hit a trough. We might have hit a point of stabilization. And from now on, things for retailers should look better than they have in the past. That being said, we are still cautious on large format retail. The large outdoor regional malls, I think, are still going to remain somewhat stressed as we work our way through the pandemic, and questions around some retailers still remain quite challenging, or the conditions for retailers remain quite challenging. On the flip side, we think grocery anchored stores, power centers, some lifestyle centers are looking quite interesting, particularly from a repositioning perspective. So we think if you want to play in retailers from our perspective, on the equity side, it might be an interesting time to look at opportunities in grocery anchored retail, power centers, lifestyle centers. Again, with the caveat that these are not trading at dislocated levels. These are not trading at distressed levels. These are trading at pretty full prices. So I think we need to recognize that and keep that in mind when we're looking to invest dollars. Our other thematic around e-commerce and logistics, I think the simple fact is that logistics and e-commerce is the best digital poster child to have. Everything that we've seen during the pandemic has reinforced the fact that e-commerce is a way of life. It's not gone away. It'll continue to become more important. It will remain a significant driver of logistics and industrial across the U.S. And we've seen that really bear fruit during the pandemic as even common items like shopping for groceries pivoted toward the internet. And we think while some of that will give back, we think that the structural driver of logistics and industrial will remain very robustly underpinned by e-commerce. And our concern going forward, frankly, is not around the occupier demand for logistics. It's more around pricing for core assets, which we know, which we see has become quite rich in some markets. And so our recommendation for investors who want to play in the logistics and industrial space is really try and approach it from a build to core perspective where they can. And of course, if you want to be a debt investor in logistics, it's still a great time to be lending to the logistics markets, but at spreads that are very, very competitive. And finally, as we round out our outlook for 2022, I think perhaps the most interesting part about where we see opportunities develop in 2022 and beyond really are the non-traditional property types. We think these property types, which some investors consider to be niche, are now absolutely hurtling towards the mainstream. Whether it's single-family rentals, whether it's manufactured housing, whether it's data centers, whether it's self-storage, we think that non-traditional property types have such deeply embedded structural drivers in them that they are going to become increasingly the go-to property types for investors, not only in the US, but globally. And I think that's where investors need to be positioning towards is go to where the puck is going to be. And we think the puck is definitely going towards these non-traditional property types. So as we look out at 2022, we'd like to end on a cautiously optimistic note. We think that the world in 22 and beyond is going to be a little brighter than certainly from a health perspective than we saw in 2020 and 2021. That being said, there are some pretty choppy waters ahead, whether it's the pivot by the Fed towards higher interest rates, whether it's very real concerns around inflation, which has obviously forced this Fed pivot, and finally the lingering concerns around Omicron and what other variants that might lie ahead. So while it's not smooth sailing, we like to think that for real estate, the opportunity set remains quite robust. The capital flows towards the asset class will remain quite robust. And frankly, the growth of these non-traditional property types will make real estate an even more interesting asset class for long-term investors to consider allocating capital towards. For further information, please visit our website or click the link below where you'll get a full copy of our report, Inside Real Estate 2022 Strategic Outlook.